Hi there, welcome to Kneppy Invest. Time for another viewer requested financial year 23 result video. And in this edition of this series, I'm going to be focusing on a company called, a fairly small company called EZZ Life Sciences. T code, could it be anything else other than EZZ? This is a small company on the ASX. We're talking about market cap in the $20 million range. However, in saying that this company is profitable, cash flow positive, operating cash flow and free cash flow positive, also provides their shareholders with a dividend, and this company is also growing. So there are many things going right for this company right now, and you'll be able to see that momentum in the business when we look at the chart. Now, there has been a little bit of a sell-off in the last few trading days because the company did release their September quarter result, and it did slightly disappoint the market. However, they did mention in that particular quarter report that a lot of their business comes out of China, and this or that quarter, the June quarter, no, September quarter, tends to be fairly quiet in China. Now, in saying it was a slow period for the company, they were still operating and free cash flow positive, and that's very important. They are able to maintain cash flow positiveness in their slowest quarter. Now, EZZ Life Sciences have two revenue drivers. They formulate, produce, and sell EZZ branded health and well-being products to retailers and consumers domestically and internationally. They're also a wholesale distributor of the Earon brand, EAORON, branded skincare products to retailers in Australia and New Zealand. Now, they definitely have better margins in their branded products, and actually I'll be able to show you that, I think, later in this video. So let's have a look at EZZ Life Sciences. But before we have a look at the results for EZZ Life Sciences, what are the next 5 videos I'll be doing in this particular series? The next video was supposed to be on Elders, but I'm waiting for that company to release their results, and they will be releasing it sometime in November. In fact, I should have a look to see if they have announced when they will be releasing their results. Sometimes companies will release announcements on their timetable. Nothing in the last month, nothing in the last 3 months, and if there's nothing in the last 3 months, then they haven't. We don't know yet. Last year, they released their results. In fact, they announced their results, what date they want to release them, on the 9th of November, and then they released their results, looks like, on the 14th of November. So maybe 2 weeks from when I'm recording this video. So wait out for that video on Elders, a disappointing company. I keep hearing Elders being mentioned on AusBusinessCore, and a lot of the experts have recommended Elders over the past year or so, yet the share price has gone down a fair bit. A BHP, that will be the next video I do in this series. Very excited to be looking and doing a video on BHP. And then eCargo, a company I have never looked at before. So I'm always excited to look at new companies because the whole point of me doing this channel is to share ideas with you. And a byproduct of me sharing ideas with you is I start to learn more and more about companies I probably would never have looked at in the past, previous life when I was not doing this channel. And then looking at Nanosonics, and then Red 5, which is a gold producer. Another company I have not had a look at, but the share price of that company and the chart of that company looks pretty good right now. I think maybe they've just gone to production or they've been in production for a short period of time, but they're hitting it out of the park just based on the chart. So that's the next 5 companies I'll be doing. Now on to EZZ Life Sciences. So all these numbers are for financial year 23, and in the green, we have the increase from the previous financial year. So pretty impressive growth in revenue, up to 37.1 million, increasing 147% from last year. Profit, again, this company is profitable, $3.6 million of profit, up 177% from last year. I doubt they'll be able to achieve profit growth of 177% in financial year 24. If they're able to do that, this would be the cheapest company in history. And I am not being facetious when I say that, because if they not only double, almost triple their profit, that means this company profit will be over $10 million. Yet the market cap of this company is about 25. I can tell you right now, 25 million, right on 25 million. Gross margins. One of the things that did attract me to this company was a gross margin, 76.8%. That is pretty high. And that tells me that they can really, sell their product at a nice little premium, that their products are in pretty good demand. And that's a good thing. It also possibly tells us that there is a bit of a competitive advantage in regards to the products, the EZZ branded products that they're able to sell. So gross margins of 76.8% can't be discounted, even though this company is quite small. Operating cash flow, 3.8 million. Free cash flow, 3.7 million. It's really interesting to see profit, operating cash flow, and free cash flow all at the same level. You don't usually see that. And another thing you have to take into account when you're looking at EZZ Life Sciences is they are or have net cash of $13.8 million. So they have a lot of cash, no debt. So you have to take that into account when you are evaluating this company. So remember I said the market cap is 25 million. Enterprise value of this company is now $11 million. That's fairly low for a company that had profit or generated profit of 3.6 million. So either the market has not discovered this company yet, or the market is wary about something. Now, possibly what the market is wary about, I'm just surmising right here, is this company's relationship with China. And the very fact that in their Appendix 4C for the September quarter, we've got to find it now, they do mention that one of the reasons why the receipts for this particular quarter was down was it is traditionally a slower period in mainland China's retail sector. So they also mentioned here operating cash flows remain positive, which is a positive. Well, I said the word twice there, of 400,000 during China's retails off season. Now, I have mentioned in previous videos that I want companies not to be overly reliant on China. For instance, Treasury Wines. And Treasury Wines have done what I wanted them to do, become less reliant on China. A2 Milk went in a complete different direction, and they've just gone full on into China and just relying on the China story. In fact, I sold out of A2 Milk because of that. So my probably only concern of EZZ Life Science is the possibility of them being over-reliant on China. And we saw signs of that in the September quarter results. Shares on issue for EZZ Life Sciences, only 42.7 million, so not a lot at all. And to be honest with you, more than likely, the amount of shares on issue won't increase all that much from here because this company is profitable. They're generating cash flow in their operations. And the only reason they might think about doing capital raising and increasing the shares on issue is if they do an acquisition. And it'll probably have to be a fairly large acquisition at that. Possibly an acquisition of a company that is larger than EZZ Life Sciences. And the main reason I say that is because they already have $14 million of cash on hand and they're generating cash in their operation. So there's no reason this company has to do a capital raising, unless, of course, it's an acquisition. And even though I'm not the biggest fan of acquisitions, that is mostly true for big companies, really big companies. And research has shown that the bigger company is, there's less likely an acquisition will create value for their shareholders. So when a company is fairly small and they do acquisitions, there is a better chance that those acquisitions will cause value for shareholders. So I won't be against EZZ doing an acquisition if it's a good acquisition, if it is able to generate returns or value for shareholders. So market cap, $25 million. That's at a share price of 58 cents. Share price, as I've mentioned before, has pulled back a little bit at the past few trading days because of the Appendix 4C for the September quarter. $14.6 million of equity, increasing nicely. Always look at equity. I want to see equity increasing. So if you look at the equity and then the profit, this company also has a really nice return on equity, 28. Return on invested capital, 31. That's two really good numbers. And I'd like to see those numbers remain above 20 for this company. And if return on equity and return on invested capital can remain above 20, there is nothing to suggest that this company can't significantly grow from here over the next 5 to 10 years. And also, this company has a dividend yield of 1.5%. Now it's a valuation, and some of these numbers look really low, really, really, really low. So the market is either missing the story of EZZ Life Sciences, as I mentioned before, or it's just a little bit wary about the business model or the very fact that they have significant business in China. Anyway, valuation, PE ratio, 7.4. Now, these are based off share price of about 60 or 62 cents. So some of these numbers are actually better right now because of the share price decreasing. Because price earnings, if the earnings are flat, and I'm not saying earnings are flat from last year, I'm just saying earnings haven't changed from when I did these calculations, but the price has gone down, which means the PE ratio must have gone down. Anyway, PE ratio 7.4. Price to book ratio 1.8. I'm not the biggest fan of price to book ratio. EV to operating cash flow. I'm definitely a bigger fan of EV to operating cash flow, preferably even EV to free cash flow. 3.3. Now, I'm doing more and more research on what's the best metric to use to have the better chance to outperform the market. And it seems like revenue growth is really important, but probably the most important metric is EV, enterprise value, to free cash flow. Some people might even say, if they turn it around, free cash flow yield. And an EV to operating cash flow of 3.3 is really attractive. That's another reason I own this company. And I might even add to my position if I see the share price fall significantly from here. I also did a reverse DCF. So what would the free cash flow have to increase from here to justify the current valuation? And I got a negative number, negative 2.4%. So the market is saying or implying right now that this company won't grow at all in the future. In fact, it's going to go backwards. And that might be a little bit crazy based off the history of this company we've seen over the past few years. Now, another reason, which I haven't mentioned, why the market may not be interested in this company just yet is it wants more history. And maybe that's all it is. And the reason I'm saying that maybe the market wants a little bit more history in regards to this company is because EZZ Life Sciences listed on the ASX in March 2021. So we're talking about 2.5 years of history. And if you are able to look at their prospectus, you're still able to get 2 other years of history. So 2019, maybe 2020. Now, via ticker, I do have, about 9 half years of history. So these are half years, not full years. We go back to 2019, and I think these numbers would have been taken out from the prospectus. Not the prospectus, but when a company does list on the ASX, they do provide financial statements for the previous few years. And I'm just looking at the announcement history for EZZ Life Sciences. And on the 1st of March 2021, they did release the financial statements for the year ended 30th of June 2019, also for the year ended 30th of June 2020, also for the half year ending 31st of December 2020. That's why in Ticker and maybe some other platforms, you get able to see some of the financial numbers for this company going back to 2019. So this is half-year revenue, also gross margins. So this is a good sign, particularly when you're focusing on gross margins increasing through time, up to 79% for the last half year. Now, there might have been a little bit of concern that revenue for this company actually did drop in 2021. So it dropped down to, or from 12.6 million down to 6.2 million. And then we have seen, or this company has seen, a nice growth in revenue from then. So there might be a little bit of cyclicality to this, or maybe the decrease in revenue in 2021 was because of lockdowns in China. It could have been something as simple as that. So 2 really good things when I look at this revenue and gross margin history. Gross margins are increasing. That's a really good sign. And we have seen revenue increase over the past year and a bit. Now, I've already mentioned that EZZ Life Sciences have those 2 revenue drivers, selling or formulating, producing and selling their EZZ branded health and wellbeing products. But they're also a distributor of that Year-On. So now pronounce it Year-On or Year-On branded skin care products. And when you break down the gross margins of the EZZ branded healthcare products to the Year-On branded products, there's a massive difference. And in fact, in financial year 23, the EZZ branded products had a gross margin of 84.2% compared to the Year-On gross margin of only 24.9%. So what we want to see moving forward is the EZZ branded products gaining more and more traction over the Year-On. And that's one thing I'll be looking at as this company matures over the next 5 years. Now onto the chart, just one chart in today's video. So we're going to look at the daily chart here, going back to September of 2021. So just 6 months after they listed on the ASX. And remember how the revenue back in 2021 actually did fall. So not a lot of interest in this company at all during 2021 into the first half of 2022. In fact, the share price fell all the way down to 28 cents. Yes, 28 cents, which is understandable. In fact, I wasn't closely following this company at all. I was following their quarterly receipts, and that's it, simply because quarterly receipts were going down. And then things started to turn around towards the end of 2022. We started to see revenue and receipts increase, and the share price and the chart, did see signs of a shift in sentiment and a change in trend in the share price, particularly around about the start of 2023. And the share price has been in an uptrend since the start of 2023. Share price has increased from about 36, 38 cents all the way to a high of almost 74 cents. Now, the share price has slipped back a little bit upon the release of their quarterly results to 58 cents. But the one thing that probably will prop up the EZZ Life Science share price, is just valuation. So there will be some, maybe not a lot, but some investors out there who will see some value in EZZ Life Sciences below 60 cents. And that is all I have for this video, looking at the financial year 23 results for EZZ Life Sciences, small cap company on the ASX, markup of only 25 million, enterprise value of about 11 million, yet this company is profitable and generating cash flow in their operations. Also free cash flow as well of over $3 million. If the company can keep this momentum going over the next few years, a markup of $25 million will seem awfully cheap. Not only that, this company has really good gross margins and a really nice return on equity and return on invested capital. So there are a lot of things to like about this company, but there's also some slight red flags as well, like that it's, I wouldn't say dependence on China, but maybe over dependence on China. And we saw that in the company's September quarter result. So if you have any other thoughts about EZZ Life Science, any other comments, just leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.